Alrighty guys, let's get this going. So this is my second live stream ever, so I'm more so just testing out how all the software works and just trying to dial everything in right now. So we'll still go through price action and everything, but just bear with me here. Things might be getting messed up and stuff. This streaming software is a lot harder than I thought actually, so just bear with me here and we'll get her going. So yeah, what a move we've had today so far. Alrighty, 1 second here. Okay, let's take a peek. So this is Bitcoin on the daily chart here. I would say the only thing that actually matters is the volume profile of this whole sideways range. So if we grab volume from the beginning of where the range was created to current price action, you can see that the high volume node is right up here around 118,000. So in my opinion, if we can't reclaim 118,000, I would say we're going to go back for the lows. If we can get full body candle closes holding above the high volume node, I do think we'll run for all-time highs. We do have a little bit of a supply imbalance in here that could stop us, but we have a way better chance of being able to take this high with full body candle closes here. So we can easily wick above this level and yeah, we can easily wick above that level, but I want to see large time frame full body candle closes. So I want to see the 4 hour above, even like a 12 hour or 6 hour would even be better. So that's what we're going to watch here. We'll make sure that goes, and then let's do a little zoom in. So I'm assuming you didn't watch yesterday's live stream because I think it only had 5 views or something, but yesterday I gave a few levels. This is one of the demand imbalances that we gave yesterday. So let's just update this here, guys. So right now I'm going to go through and find some demand imbalances. There will be supply imbalances above us. And just to give an example, this is what's called range supply. So this range supply has barely been tapped into. So it's not mitigated or anything like that. It's mitigated once all the liquidity of the demand box or the supply box is taken. So this is the start of going into the rejection zone. So we'll start adding some demand imbalances here. So these ones down here are all still accurate, and all it is, guys, is, let's break it down a little bit more just in case you don't know, is when you're in an uptrend, you have what's called demand below you. When you're in a downtrend, you have what's called supply above you. So what a demand imbalance is, finding the candle that has the imbalance with a full engulfing candle that follows it in the range demand. So this is all range demand here. And the reason is because look at the market structure, up, down, up. Right? This is what's called a protected low, and this is a break of market structure. So if we come back into this fair value gap, the first zone that I'd be watching is the range demand first, but I would rather watch the demand imbalance because we can take the range. A lot of the time the range is pretty big, right? This range is more than $1,000. So I want to get a closer range, really understand that. So let's put this imbalance, and then we'll start going through live price action here in a sec. Okay, here's a imbalance, and again, remember, just market structure. If you're ever if you're ever confused in an uptrend, just draw your market structure. The last protected low and all the protected lows before, if none of them was tapped into, you got range demand, you got imbalances in that demand. I've actually barely looked at the charts prior to this, so I'm kind of doing the update as well for myself here, finding a couple spots. And the thing with demand, guys, is you can fully mitigate demand, mitigate supply, and what that means is fully taking the level. Like what we see a lot of the times is you actually fully take the level and then you go. So don't be surprised if these levels are actually fully taken, and then you spring after you mitigate them. We see that all the time. So yeah, the main thing for me is this major POC up here. If we can't reclaim the major POC, I would say we're going back for the lows. Now, what we want to look at here is, are we going to form a local lower high? So you have this downtrend. Is this going to be a local lower high for continuation to the downside? So there's a few things that we want to look at. We want to be watching that major POC up around 118,000. But we also have the POCs that we want to watch that could create a lower high. So this can easily, I would say, if you start to fully reclaim like the 786 like we're doing right now, I would say your minimum going to that major POC. Okay, so let's get a little crazy here. Zoom in. Just do one more look here. Okay, so I just want to put a few levels that we have above us. I have another chart beside me here. I'll just throw a few. So a single print gets filled there. There's a daily order block there. And okay, that's about it. This is really all we have above us. So right now we're at a liquidity grab. This is where if you get a swing failure, this is where it would happen, right? Because you came up and you take out all the stop losses. And all a liquidity grab is that. So let's say there's a bunch of guys that have $100 of risk up here. Their stop loss is right here. What a swing failure is, it's coming to stomp all these guys out, grab all their positions, liquidate or stomp their positions out, and then keep going to the downside. So this is the first thing that we're going to watch right now. Pull open market Cipher. Okay, so we are starting to form very local, like 3-minute bear divs. Momentum has kind of just slowly been, I wouldn't even say it's bleeding out, it's kind of just hanging out. You got the momentum waves that, yeah, they're going a little bit lower. I would say nothing that I would get crazy about yet. No, there's nothing here yet for me. There's lots of other things that you might be watching. It's just, I like to take the highest probability trades. So what we also can do on these streams is I can give a bunch of trade scenarios, and then I can let you guys know what trades I would actually be taking. So we'll eventually get into that. Right now, I'm just gonna wait and see if there's a setup I like, and then we'll keep maybe find a bunch of scenarios. So I'm definitely not interested in longing the market. I'm not even interested in scalp longing this market. The worst thing you can do is try to open longs going into resistance. First resistance, second resistance. Even if this looks good and say you hold the POC and keep going, since I'm a full-time trader, we have like tons of positions from lower down that there's no reason that we would want to look for a long where you would potentially see that massive rejection. So it's just not worth the risk. This is where patience just actually makes you more money. You kind of just sit on the sidelines. Okay, and while this is doing its thing, let's just look at money flow here. So money flow in the weekly from this last high right here to this high right here, money flow is slowly decreasing. Nothing crazy, slowly decreasing. Now you see these momentum waves? This is what's called a bearish divergence. So we have a bear div right here on the weekly time frames, something that a lot of you guys are probably aware of. Let's zoom in a bit more. So the 3-day money flow, nothing crazy about the 3-day. This is what we really want to see. We want to see if we can start to get these 2 and 3-day trigger dots. Because if we can start to get the 2 and 3-day trigger dots, there is a good chance that as long as the time frames before don't keep flipping into the green, that you run back, or into the red, that you run back for all-time highs. So I would say the only thing I don't like with the 2-day dot is your time frames before have already bled out to bearish money flow. So I'm not actually interested in the 2-day, I'm more so interested in the 3-day. As long as the 2-day can remain green money flow, I would be interested of taking like a macro long off the 3-day continuation signal, which would be the dot. Now the 3-day dot needs 3 days to confirm. That's completely up to the trader. Do you front run the day confirming? Do you wait, right? That's completely up to what's the risk look like at that level. What's your risk to reward, right? Is it worth front running it because you can handle entering it again if you know proper risk management? So I would say that on larger time frames, the 1 day as fully bleeding out, you do have the dot that confirmed the other day. The only thing with these dots, when money flow is like this, I don't really care about them. Just because, yeah, like these I don't really care about, guys. I'm more interested in that 2 or 3 day. It has green money flow still. Whenever you have red money flow, you want to see if there's continuation signals for a short. So if we zoom in a little bit more, let's see if there's a continuation for a short trade, which there actually is. So the continuations to start watching for shorts is like your 6 hour, you have red money flow, you're starting to get the dots. So if this money flow keeps decreasing, there's a good chance that the momentum actually turns around and everything, right, too. If the momentum starts to turn around, that means that price is dumping or consolidating. Yeah, it's kind of just back and forth money flow wise here, guys. I would say the biggest hint that we'll get is probably on these low time frames. There's nothing that I really find too crazy here. You got increasing money flow on like your 15-minute plus. You see how everything has gotten thick into the green now? Which we can clearly see on price action, right? If I just put a sideways line here and just look at when it started, right? You had the flip in money flow before this massive uptrend even started. So money flow is telling you this long before. And we can do it vice versa, right? So if we start to see money flow bleed into the red, then we can do the same, right? We can maybe think that the uptrend is over and so on. So the smaller the time frame that you're listening to, the more risk. So an example right now is, let's go to the 15 second. The 15 second money flow has flipped over here. Now, does that mean the top's in? Definitely not. This is a 15 second. Could that mean the top is in? Well, 100%, right? Every drop starts on your 5 second, 10 second, right? It's just, these are for scalping signals, not for thinking an actual top is in or anything like that, right? You want to see larger time frames. Your 3 minute, go to your 5, go to your 10, your 30 minute, right? You want to see it snowball down, curl over. You want to see a nice curl over. Okay, so I've just been rambling here. Let's go look at price action again. Okay, the one thing that I actually do like about these, not a trade setup for me, it's just this is when I'll start paying attention, is after this top came in, you see how the purple RSI is well below the red RSI? To me, this usually means that we're closer to a top than we are a bottom, just because if these RSIs don't flip over and it just stays in the red like this, whenever you get, say, a confirmation dot, I use market Cipher for my strategy, so whenever you get a dot on the lower time frame and you see something like this on, say, your higher time frame, this usually means that lower time frame dot will cause this, right, where the purple line can't cross the red line and then the downtrend just continues. So as far as do I think we're pumping right now, I don't. Until these RSIs can flip back into the green, I don't think we're pumping. I'd be more so interested in watching for lower highs or bear dips. Now we can still take the pump, we can still pump and whatnot. The 15 second, you got to remember this is the 15 second. So if it starts happening on larger time frames, let's see. So it's happening on the 30 second. It's happening on the 1 minute, on the 2, on the 3 there's separation, and not on the 5. So the 3 minute and lower are starting to signal like a potential top coming in, or watch for a top being formed, and then still going up to larger time frames you have the lines are still at the zero line. And what I mean by at the zero line, sorry, not at the zero line, they're just even. You can't see the purple, you just see the red here, right? We want to start seeing that purple if we're watching for shorts. Okay, so this is where we would start to just watch for a lower high. Okay, the one thing that I already don't like is you see how the 10 second crossed? This is saying I'm not allowed to take it. Like, I'm very aware that one could come in here. It just, this isn't worth the risk. Especially when you're in a massive uptrend for the day. It's just not worth the risk for me. What would the entry be? If you were looking at a short, in my opinion, the entry would be probably like the 30 second or your 15 second dot. But just notice something here. When you got your 15 second dot, see how the RSI just flipped green? Meaning I can't listen to this. This is a big no-no. I can listen to my 30 second, but the 30 second is such a risky setup because look at all your RSIs before that. 15 second bullish RSIs, 10 second bullish, 5 seconds still like bearish, right? So that's what kept us out of this trade right here. So we'd watch for a bear div being formed at this high, which it definitely can. So you can have a swing failure bear div coming in. No, it's not worth me even looking at here, guys. So once we get this This is a bear div on the 1 minute. Is it a bear div that's worth it for me taking? No, it's not. Way too risky for me. And again, we're not talking about longs, because I don't long in environments like this, guys. You're just setting yourself up for failure, in my opinion. The Qs are positive. What's Nvidia? Nvidia is a little negative. Tesla's up. Amazon, Meta, Google's down a little bit. What's gold doing? Look at gold and silver. 5 and 7%. That's pretty crazy. So we'll put a line through of where the 1 minute bear div is going to come in. Okay, it just came in. So there you now have a 1 minute bear div. Why am I not taking this? Because there's not enough things lining up. Do signals like this work? They work all the time. This is what you would call like a, maybe like a D setup, right? If you have A being the best and so on, I would say this is like a D setup, because this is risky in a massive uptrend like this. And the reason why these are risky is because you can stack bear divs all day long. While you're in this massive uptrend, you could go down a little bit, it comes back up, and then price could be just absolutely pumping while this is happening, right? And that's where you really got to pay attention to what time frame are you trying to listen to. If you're listening to the 30-second and you're taking a quick little in and out scalp, that makes total sense. If you're listening to the 30-second trying to find the exact high of the day, that makes no sense, right? Can your 30-second signals lead into actually it being the high? Of course, but so in an uptrend, we're now entering demand. And I'm going to take, so now we're aware that this is all range supply, guys. So I'm actually just going to find the imbalances in the range. I can't have such a big zone like that. It just doesn't make sense. There's actually this right here. I have this on my other chart. YouTube supply. We'll go back to price right away here. It's just I'm not interested in taking the short. So, but we showed you the setup. It was that 1 minute 1 minute bear div. Here's a imbalance right on this daily order block. And actually, I'm just going to put it up to here just because these highs up here is kind of all the imbalance. You got very low time frames. Okay, let's go back to current price action. So the 1 minute would have been profitable, but this happens all the time. That's not a setup that I was willing to take, and it's still not a setup I'm willing to take. What am I willing to take? I'm willing to take a lower high from here. After a bear div, I like to see a nice lower high, potentially at a golden pocket or the high volume node of this sideways range up here. Hopefully the audio hasn't been too loud for you guys. So a strategy that I have of mine is called a continuation strategy. And how it works is, here's this yellow line here is the 200 moving average. And then this indicator below is market cipher. Whenever we're above the 200 moving average, you can look for what's called continuation longs. The strategy that I have to look for continuation longs is the more time frames that agree with money flow going into all the green dots coming in, the higher the chance that it's going to work. So you see how on the 30-second we're above the 200 MA and money flow is also in the green. This is what's called a continuation signal. But if 0 time frames before are in green money flow, this is something that never works, right? If you're going into this green dot and all the time frames before also have green money flow, these are kind of your best chances for continuation trades. So that's my continuation strategy. So let's see if the time frame before agreed with the 30-second. So you see how the 15-second said no, like it said do not take the 30-second. So now let's zoom out again. The 30-second is telling me I can take my 1-minute signal. So let's see, do we have a 1-minute signal coming in? We do. So this 1-minute dot is your first decent signal on a continuation. Now, what I said before, the more time frames that agree with that continuation signal, the better the chances that you're going to win it. Right? So if you started to see maybe a 2 and 3 minute dot going in, like your 1 minute going into your 2 into your 3, those are beautiful continuation trades. I would say more than 50%. So, and if you have proper risk management with those are setups you can take all day long. So we'll see that if it even gives us an opportunity for a continuation. If the 30-second flips into the red, okay, right here, the 30-second just flipped into red money flow, meaning I'm not allowed to listen to my 1-minute dot anymore. My 1 minute is saying I'm allowed to listen to my 2-minute dot. So I'm no longer allowed to listen to my 1-minute dot. We'll still pay attention to it, but I'm not allowed to listen to it. And we can get rid of this red line. You could see that the bear div probably paid you if you took it. We can see we're probably at this local golden pocket, yeah. This is all one massive fair value gap, so usually after something like this you consolidate, but unless we're going to have one of those crazy wicks on the daily, right, where you reject somewhere, say the monthly open, and then by the time you actually close the candle you're way down here and it's a decent sized wick at the top. If you don't see that, I would say consolidation and the next candle opens up with a bullish candle. So let's zoom in here again and see if we have that 1 minute continuation. Okay, so the 1 minute continuation signal popped up, but remember what we said, the 30-second flipped into the red, so we weren't allowed to listen to it. We are allowed to listen to our 2 minute dot. So let's see if we get a 2-minute continuation signal. So the thing I can notice here right away on the 2-minute is it needs some time. You see how this light blue still needs time before it crosses the dark blue here. So this is telling me I can wait a couple minutes. There's nothing I need to be rushing for. And again, the lower the time frame, the higher the risk, but probably the tighter the stop loss. So your 15-second is trying to flip back. So again, I'm not interested in longing this market. I'm only interested in shorting it. A setup that I wouldn't mind seeing is a lower high here, just because your 1-minute RSIs are still open, so I could definitely see a scenario that you do put a lower high in somewhere here. And if you don't, most likely our strategy will keep us out from taking the lower high. So just because I think something doesn't mean it's going to happen, we just pay attention to it. And if ever anyone's just joining us, these green boxes aren't say like my buy zones or anything. This is what's called demand imbalance. So we can fully mitigate these zones before the spring. You can come down and take all the liquidity and then take it. The main idea behind this is once demand is taken and fully taken, it flips into supply of some sort, a supply imbalance or range supply. So if this level gets fully taken, if we fully lose the level, it's most likely that this will probably all be created into range supply, meaning once we ever come back up to the level, we'd be watching for rejections in range supply. If we hold the zone, if we fully mitigate it, it makes perfect sense to still go. We're allowed to bull div in these zones, so they're not randomly long zones. I'm not setting limits here, nothing like that. And then we do the same for the supply. So this is a supply imbalance above us. Very low time frames, right? We're on like the 30-second and the 1-minute right now. So let's see, still no 2-minute. Put that on there. So the 2-minute can flash whenever. Does the time frame before agree with the 2-minute? That's the 1-minute. The 1-minute has green money flow, meaning we're allowed to listen to the 2-minute dot. Now, to give us the better chance at taking this trade, I'm not interested in a long, so we're just going over this scenario. The reason why I would never take this, even if the 2-minute dot comes in, because the RSIs are saying it's not go time yet. The RSIs need to get closer for me to want to take a continuation. Here, I'll go to the 2-minute and draw it up. So if I got this dot here, let's say this turns over and I get the dot here, I want to see that, let's say these RSIs drop quick. I want to see the RSIs cross back into the green with the 2-minute dot coming in. That gives me my best chance at winning this. If you take scenarios like this, remember it's like a D setup, because you're not letting everything come together. Now, can we take a trade where everything comes together every day? Not necessarily, right? You might be consolidating in a sideways range and you're just trying to take the best trade you can for the day. So we've now just tapped into that range demand. We're right at the 786. So we'll get rid of this, get rid of this. This can turn into previous resistance. are now creating, this is all range supply. So within range supply, I like to find imbalances. So instead of marking the whole range supply, let's mark an imbalance in the range supply. Let's take this. Let me just put this on a different chart for a sec. Okay. Eventually with these streams, I'll share like my Exo Charts and stuff, but I'm just working out how I want that to look. So once we're in the zone, I like to just get rid of the words so you can see it clearly. So now we want to see, is there any sort of bull div happening, hidden bull divs? So 30 second has rolled over, 1 minute is about to roll over. See how the 2 minute didn't even give you the chance to lose the trade? Right? It's not like it even printed the dot. It didn't even give us the chance to lose the trade. It didn't set up at all, so it keeps us out of it. Okay, you have a very local 15-second bull div. These can easily just fall back down, but we still pay attention to them. But it's the 15 seconds, so you could lose it immediately. Money flow is fully starting to bleed out. You're probably starting to get the larger time frame red dots starting to print. Let's see. All these are, so the 30-minute red dot confirms in 5 minutes. So we'll come back to that in 5 minutes. Okay, this is what's called mitigation of the zone. So if we bounce here, that's grabbing all the liquidity in this whole zone. How do we not get trapped here? Does the strategy say we're allowed to enter anything? The lower the time frame you listen to, the higher risk. So there's 5-second bull divs, right? Is there 10-second? No. So if you're trying to take like a E setup, yeah, you can listen to your 5-second. If you're trying to play the market safer today, wait for more time frames to agree. So you see how you're able to pick these out, but you're allowed to pick and choose what you want. Give yourself the best chance of winning these trades. So we were very aware that there was a 5-second bull div, but even if you spring this, these are the trades that I don't care if I miss at all, because things weren't setting up for me to take the trade. So where we were very, frick, I lost my train of thought. So let's keep going down. Let's see, have we ever got that 2-minute dot yet? Not yet. Are we allowed to listen to the 2-minute dot? Let's take a peek. If the 1 minute is green, we're allowed to. So the 1 minute is green, the 2 minute is green. I'd feel a little bit safer taking the 3 minute, but we'll still pay attention to the 2 minute. And you can mark all these spots out. These are all swing failure zones. I don't usually mark all these out, but all these are where you would watch for like a swing failure, very local swing failure. And once you take demand, you start to flip demand into supply, and that's exactly what we're doing here. And now this is where I just got to be patient for the day, because I didn't like what I seen up here at the swing failure, so I just got to wait for a nice lower high that I like if this downtrend's actually going to start going. Now, can we start taking these setups? Of course, you can If you want to play the day a little bit higher risk, we don't have to wait for everything to align. I'm going to though. I'm going to wait for everything to align and give us a nice setup. So we're not allowed to listen to the 2 minute anymore because the 1 minute is in red money flow. But this is what I would want to see. Like, let's say this was all green money flow. I want to see the RSIs being able to cross at any moment coming into the dot. So if this was like thick green, this would look really nice for a continuation signal, but it's not. So, and see how far this 2 minute is still away. Your RSI is so far down. We really need to see this red start to drop here in order to save this trend here. If you start to come back into this zone, things could get pretty ugly. This is a pretty aggressive fair value gap. So for the bulls, you definitely don't want to see us like lose this 382. You're allowed to wick into it, of course, but you don't want to see like full body candle closes, because what goes up that fast must come down that fast. So not actually, but you know what I mean. So is there local signals that things could start pumping? Let's see. Money flow looks like crap. There is like very low time frame, like bull deals, but nothing I care about at all. I'm waiting for the 2 and 3 minute. And I'm waiting for them, but I'm still not going to take a long trade. So if we're just staying in this very local downtrend, this is where it would happen. So you see how we mitigated the supply, and this is kind of what I was talking about before. You're allowed to come up and mitigate it. That means you stomped out everyone that had their stop losses above that last high. After bull dips, even if they're local bull dips, we always watch for bullish signs at a potential higher low. So we do have, say, like a 5-second bull dip. Do we have bullish signals at that? Your RSI on the 5 seconds says it could make sense that we do form a higher low here. Your 10-second is also saying, yeah, that makes sense if we form a higher low here. Your 15-second is green, is saying it makes sense if we form a higher low here. Your 30-second is saying that, and your 1 minute is not. So you see the lower the time frames you listen to, most likely the better entry, but the higher the risk. So if we don't care about listening to our larger time frames, then the lower time frames is when you only get like a C or a D setup, because you're not trying to get everything to roll into each other. Let's see, is the 5 seconds still holding on? And again, it all depends what kind of volume and volatility you have for the day. If you're just in a boring sideways range of like $1,000, then you have to trade this strategy a little bit different. If we have massive volume like we do today, then you can really wait for these nice setups to come. So this is kind of what we're watching for. Is it going to come down and form another bull div? Or are we going to put, okay, well, we just got our answer. Has the 2 minute done anything yet? No. 2 minutes still hasn't, so that supply imbalance did work, and now it created more supply. If you go up and reject from supply and you don't start to reclaim the supply, you usually just form more supply. So we have very low time frame bull divs. I don't really care about this, guys. Money flow, I'm more interested in, does the money flow match up with the local bull or bear divs coming in? And right now, like, money flow is decreasing so hard, I'm not going to try to catch a knife that just doesn't make sense for me. I only try to catch these knives when it fully makes sense, because you got to remember, I have such a tight stop loss that I can lose these trades in about 1 second. So your 5 second looks pretty good. Now the thing with the 5 second is you can still roll over for a little bit, but then in hindsight, all it is like the 30 second coming up, and money flow on the 30 second is still just thick. It just brings it back to the 0 line or something. And these lines, these are like the confirmations on your bull divs, right? So if you're looking for bull divs, these are like D setups, right? You're not waiting for everything to cross, but you do have a few low time frames. So you see how we're able to do the timing of all these little pumps, right? All these little bottoms. But we can be really picky with which one do we actually want to take, right? So do we have that 2 minute coming in now? Okay, so the 2 minute confirms in 14 seconds, but we're not allowed to listen to the 2 minute because the 1 minute is still red money flow. Since the 2 minute is green money flow, we are allowed to listen to our 3 minute. So this is the one I'm watching for. So the 3 minute confirms in 3 minutes. This is where it's completely up to the trader. So this is where it crosses. See how this can easily disappear. If we start to dump right here, this will disappear because there's still 3 minutes remaining on the candle. So this is where we would drop to lower time frames to see if it's going to work. But there's the dot that we were waiting for. Am I interested in longing? Definitely not. Not when something looks like this, not when the daily looks like this. I understand trend trading, but to me, we haven't even had a solid enough pullback to justify it. Okay, and I want to talk about this supply here for a second. What these mean is when you start to take the supply, you could flip the supply into demand, and it's all based off market structure. So you see down, up, down. We've now taken the level. This was all called range supply right here. Once you take that, it's not like we can't dump through. This could be a mitigation of the supply. But this is where you want to watch for the start. Does this supply turn into demand? You can pump like this. You can come back a little bit into the zone. So 100%, this is where I'd be watching for like a resistance support flip, support resistance flip. It doesn't need to happen right at the top of it. It can still come back all the way into it and then pump. And this is where we get higher lows off like a Fibonacci. So this is where I like to put this yellow box now, and it just says flip, just to say, is this the flip of supply? So you can see that we're tapping on it. We weren't allowed to flip it yet. We have our 3 minute that confirms in 45 seconds. Remember what I said about the larger the time frame that confirms, the better the chance that we have. So we have the 1 minute still in red, meaning the 2 minute was sketchy. The 2 minute is in green, meaning you can listen to the 3 minute, but the higher the time frames that do it, the better the chance we have. So the 5 minute is the next dot we're going to watch, right? If we start to see all these low time frames dots start to work, then this is going to not work. You're going to roll this money flow and this is going to start to bleed. And that's just why I like to wait for the setup, just to look nicer. So we'll keep saying all the setups. So again, this is the opposite of the continuation to the upside. This is a continuation to the downside. You are below the 200 moving average on the 15 second, meaning you can listen to continuation shorts. The 15 second gave red dots. Does the time frame before agree? The time frame before said no, you're not allowed to. The 15 second is saying if the 30 second agrees, we're allowed to listen to the 30 second continuation signals. And whenever this happens, whenever you have one continuation versus another continuation, this is what's called decision time to me. This decides the next, I would say, few hours of the day right here. So I put a line through. Oh, see how the 30 second disappeared? So we'll see here. Oh, it just appeared again. So that is the 30 second short signal. The 3 minute just confirmed. So you have your 3 minute versus the 30 second. And I just want to show a scenario of, and I never take trades like this, but on your 3 minute, if you were to look to say long the 3 minute, maybe stop loss to a higher low or to the low and then target the highs, and then you take a scalp short on your 30 second cross targeting the lows, and you have the trade set up to 4 to 1s, 5 to 1s, those are like acceptable hedging in both directions. You need to be a little bit more of an advanced trader just on the risk management sort of side of it, because you can get yourself burned, but I do sorts of things like that all the time. So me, since the trend we're in, I'm definitely more interested in the shorts. Have we pumped high enough for me to be watching for a higher low yet? No, not yet. Or sorry, a lower high yet? No. So again, the 30 second confirms. So these are where you're watching lower highs. So the one thing I want to just show you with these is, let's say, okay, you got in, stop loss to the lower high. What you do on these is, so these are ones you can be really quick with your stop loss too, but let's just say we took this. These are ones where if you think these bull divs at the low are legit, you don't take this trade. If you take the scalp because the ratio is amazing, right? Like let's say it's a 5 to 1 ratio, you want to be pulling, in my opinion, a TP1 before taking the low, because then you can consolidate in a sideways range and still win the trade. You can come down, consolidate, and maybe we find another opportunity just in the sideways range. And these are ones, stop loss to entry very quickly too. And we didn't take this, so I'm getting rid of it. But you know what I'm talking about. So 5 minute is about to print, and remember, it's your 3 minute versus your 30 second. It's the battle zone. This is where if you think the 30-second is going to win, you want to watch for like 5-second red dots with the RSI thick in the red, which it's not right now. You see this? The 5-second is saying, oh no, this might not work, right? If I was interested in taking that lower high, I wanted to see the 5-second flip the RSI here. This one is way nicer. So if I was taking a lower high, it would be that one. It wouldn't be this one. This one's too high of a risk. So this is the one that I would have taken. And now we watch. So you see how the 3-minute can still win, because the 3-minute needs to take the low before being invalidated. So both can win. Your 30-second, you can get a winning trade potentially into your 3 and 5-minute continuations. So this is for sure where we want to watch for a higher low. Am I interested in, to take this position? No, definitely not. I'm not interested in taking a long in this environment right now. This is where we would watch. Is there one potentially coming in? Let's see. So 5-second RSI is saying there's a good chance. 10-second is saying nope. 15-second is saying yep. 30-second is saying yep. 1 minute is saying nope. 2-minute nope. 3-minute nope. So me personally, whenever I see like the 2-minute and stuff, the RSI is so far away that it's just not worth it to me. The setups that we can find are finding your higher lows when low time frame RSIs are agreeing. So you see how the 30-second and lower, all the RSIs are green and they're actually thick, like the RSI is well below the purple. That's what you want to see in an uptrend, but I hate the look of this 2-minute. This 2-minute looks just sketchy. It's saying like if you're taking a higher low trade, it better be worth the ratio, like it better be worth it, sort of thing. But if we start to get those dots coming in, right, the 5, the 6, the 7, all these different dots. And remember, the 3-minute, until the actual low is taken, it hasn't been invalidated yet. So trade setup for if this is actually a higher low would be, I don't even really see anything here, guys, but if it was, it would be like the 30-second green dot, but I don't really see that right now. But we'll pay attention and see if this 30-second green dot, as long as the RSIs remain like this, we'll see if the 30-second green dot marks the local low. So we'll pay attention to that. Okay. If this low is fully taken, remember this is all flipped into range supply, rejection zones. So we'll see what this 30-second dot can do here. 1 second. So the 30-second one, we'll get rid of the red line. So that was a winning trade. We didn't take it. Okay. So to me, the only thing that can beat the 2-minute and 3-minute right now is the 30-second. Like if the 30-second can't even do it, all of these low time frames, RSIs will start flipping back into the red. And see, even the 15-second and 10-second and 5-second, like, well, 5 seconds not. This is definitely like a D setup. If you're watching this, for sure a D setup. Oh, it disappeared. So let's see if it prints again. We're taking the low, we're taking the liquidity. This all flips into range supply. Okay, this could be a 1 minute bull div into the swing failure, so we want to watch this. Okay, we have lots and lots of shorts coming in. The 5 second is green, 15 second green, 30 second green, 1 minute green, 2 minute and 3 minute still look crazy, crazy sketchy. So the 30 second beat up on that 3 minute, 30 second ended up winning. So remember, this is all range supply. I like to just mark the imbalances. We don't need this anymore. Don't need this. Let's see on this chart if there's any levels we need. Nope, not really. This is the sketchy zone right here, guys. You don't really want to get into this zone. I would say you don't really want to see us lower than this for the bulls. I'm cool in any direction. The video is still down. Okay, so the only long opportunity here, so I'm just going to keep talking about the only trade setup. If you're interested in a long, the first setup to watch would be this 1 minute dot, because the 1 minute dot is a bull div. Again, the lower the time frames you listen to, the higher the risk, potentially the higher or the better entry, but the higher the risk. Now, do we want to wait for the dot to confirm or whatever? That's completely up to the trader. This is the only long opportunity as of this second that I see, is if the dot confirms. Now, what don't I like about this? Like, money flow looks like crap, guys. Is this a long that I would ever take? No. Unless I had a really profitable day, I would never take this. This is not a good setup for me, personally. So we'll wait for that dot to come. Okay, so the dot just came. Let's see if it gets invalidated or if it stays. This is where you don't even really need the price chart, right? Because we have our strategy. So we're still watching to see if these 5, 6, 7 minute dots can come. So we'll put a green line through this one now. This is the only bullish signal coming in this second. So we'll keep marking out all the bullish signals coming in, but this is the only bullish signal this second. Is it a setup I would take? Never. Never, ever would I take this. Yeah, we want to see this 2 and 3 minute. We got to see these RSIs get closer before like actual bottoms can be formed. These can all just be local bottoms to lower highs, or sorry, yeah, to lower highs. And this level I'm pasting right here. This is the macro fib from the bottom to the high. I'll be right back, guys. Alrighty. I am back. Okay, so far the 1 minute is doing its thing. The one thing, when all money flow starts to turn over and stuff, like these dots can just cause consolidation, right? So even something like this, see how we're able to time at least the consolidation. This might run for all the way up for the highs. It's all just about that we're able to pick these up, right? Because then we can pick and choose. If we can become very accurate when the bottom or a top is forming, that's where we use our patience and our discipline to wait for that perfect setup. We want to see A and B setups. We can take the C and Ds if we're having a good trading day, a good trading week, we're up money, proper risk management. I take D setups all the time. On Tuesday, the beginning of the week, am I taking C's and D's? No. I'm after that A on a Monday and Tuesday for sure. For sure. And you'll always get like an A or a nice B setup scalping wise, right? You're not going to get them on large time frames, but I'm a scalp trader. Very rarely do I take large time frame trades. Okay, so let's see, is this leading to the 5 and 6 minute dot yet, like we've been waiting for? Because once the 5, 6, and 7 minutes start like actually confirming, I would say we're going to run up to the next rejection zone, probably up here. So it is pretty key. Now, can we still go for the low, right? Can he still do this, maybe? Can we do this? Can we do this, right? Now let's do the opposite again. Is there continuation short signals coming in? The 30-second is about to give us a signal if the 15-second agrees. The 15-second is, these are sketch. This is when I definitely don't listen to the 30-second. I would rather go another time frame larger, like the 1 minute. But you see how the 1 minute momentum isn't above the 0 line yet, so we won't even get the 1 minute signal yet. So it's still just telling me to sit on my hands and wait here. Let's pull a local fib. And I'll keep saying it, guys, this is all range supply, so we're allowed to reject just in range supply. I'm just drawing out imbalances. So this is all range supply. We've now tapped into range supply. And this is where you get a lot of traders support resistance, right? This was previous support. Is previous support going to turn into resistance? If previous support to the dollar, like to this exact zone, doesn't turn into resistance, doesn't mean you can't come up into the range demand with the imbalance, right? Let's pull a sideways range from here and see. Yeah, so it's up there. We'll get rid of that. So the 30-second continuation came in, but we're not allowed to listen because the time frame before is saying no. See, it's in green, we're not allowed to take it. The 30-second is slightly in the red, so we're allowed to listen to the 1 minute dot, but the 1 minute dot, see how the momentum? Unless price just tanks, of course you can get the dot instantly if price just tanks. Most of the time when you see this, it still needs time to curl over, right? It still needs time to do its thing, and then it prints. Still lots, like if you tank, of course, this can just go down and print the dot right away, but more times than not, you see you need time for the rounding to actually happen. Okay, you do have a very local 5-second bear div, and the 10-second RSIs are saying you could go down. The one thing that's saying it's probably not going to, you're 15-second, right? You're fighting against both here. So this is, the 10-second is saying, yeah, we're allowed to go down, but money flow is still doing its thing to the upside. And the 15-second RSI is saying be cautious if you're trying to take a short. The RSIs on the 15-second are saying we're nowhere near flipping back into red money flow. Or, red RSI. Again, this is only the 15 seconds, so take everything. Take all the low time frames, right? The lower the time frame, the higher the risk, but potentially the better entry. and the 1 minute dot is about to come in. Now how do I know if I would take this? The RSI is in the green and saying that we still are going higher. I'm not willing to take this. These work all the time. These are D setups. This is not something I would take. The RSI is saying do not take this. They work all the time, but I take the highest probability trade setups, right? Which we all should. Why rush? If we're patient, we have to take less trades, right, guys? We'll be trading all day just to try to get break even by the end of the day. If we can just be patient traders and maybe wait for 1, 2, 3 trade setups for the day, and then pick our favorite out of those couple, right? Okay, so we marked the 1 minute bull div with this line. Let's mark the 1 minute red dot now, because this was the next signal that we were watching, is that dot. So you see, if you took something like this, now I don't know if you hit your TP, maybe your TP is up at the golden pocket or something, but now you can reduce risk. You could put a TP to remove 25% of your trade underneath here if it doesn't start to hit your TPs up here, to make sure that you still made money on this. Now let's go back to this. Yeah, and this is why, this is what keeps me out of this, right? The RSI was saying, no, it's not time yet. We still are going higher. So let's see how the 2 minute dot will react. Oh, we can't even get a 2 minute dot. See how low the momentum is on the 2 minute? The 1 minute is the last thing that can stop the bulls from pumping price up. Yeah, this was kind of the last thing that can dump price from here. And it didn't do it, right? So it is saying just be patient, right? Let this 2 minute curl up. By the time the 2 minute curls up though, the money flow might be back into the green. So this is where we really want to watch, is the 5 minute. Okay, the 5 minute just confirmed. The 6 minute is about to confirm. So if you can get, this is very, very critical. If the 3 minute, 5 minute, 6 minute, 7 minute, their job is they need to take out the high that created it. So let's go to the 6 minute here. So the high that created the 6 minute is this high. This dot's job is to take out this high. If this low gets taken before this high gets taken, that is an invalidation that the 6 minute continuation dot failed to do its job. The higher the time frames that failed to do its job, the higher the chance that we know a local rejection, and then when you start to see it all turn on higher time frames, that local rejection might actually be the macro rejection, and all these low things can lead up to the big play. So these dots, once they've confirmed, their job is to take out the high. If they don't take out the high, it's not looking too good, right? So these dots, this is make or break for sure. We need to take the local high for the day. So the bottom, if the bottom is not in, that's going to start invalidating all these dots. Now if the dots don't confirm, they won't, it's not like they printed and then didn't confirm. So if this disappears, that's fine. We can still wait for the 6, 7, 8 minute dot. See how the 7 minute hasn't even printed yet? And so it's not like it's make or break this second. Already it's starting on the 5 minute, right? It started on the 3. It's now on the 5. Can the 6 then print? Can the 7 then print? So we can stay on our low time frames to get a better idea if that's going to happen. So we do have 15-second bear divs. we front run the golden pocket a little bit, but we have a 15-second bear div. What's the 30-second looking like? The 30-second is saying, don't be surprised if we just get higher lows and continue. The 30-second does have bear divs, but it's bear divs with the RSI wide open. The 30-second to me is saying higher lows, but look at how the money flow, right? It's starting to bleed out. But the 30-second is saying more upside to me. Or not necessarily even more upside, just it's not time yet. We need more, we need this green RSI to get closer to the purple. Now, can we see the very local plays? Okay, so this would be the first opportunity of the lower high. So if this 15-second bear div is actually going to do its thing, I'll show you the first signal on it here. 30-second is still wide open. Well, it would be this 5-second dot. This is definitely like an E setup. This is something I would never take. I would wait for this 10 and 15. But this is the high risk, lower high of if you were to listen to the 15 seconds. So I'm showing you the signals that I would watch for if everything was aligning to me. They weren't aligning, so it's something I would never watch for. And that's how I don't get stuck in those. But that's how we can get crazy entries with amazing stop losses. Right? Because I would have something like this targeting the low. So with almost a 5-to-1 setup, can I tackle this trade twice? Can I give her a go twice right? So just an idea. Because even if I lose it once, or even if I lose it twice, I lose 1% on each trade, 2% plus fees. So let's say 2.2%. If I'm targeting a 4-to-1 setup, a 5-to-1 setup, if I hit that 4-to-1 setup, I profit 2% for the day still, with 2 losers, 1 winners. So let's see these 6-minute, yeah, the 6-minute confirms here in a minute 35. Is the 7-minute starting to print? The 7-minute is about to print. We're right at the golden pocket value area low. Do we have more bear divs coming in? Slightly, you do. Is it a short that I would take, or like a scenario that I would take? Definitely not. The 30-second RSI is still wide open. The 1-minute is still wide open. This is where I'm just patient. I just hang out. It'd be nice to see this 2-minute here, the 2-minute RSI flip into the green with the 6, 7, 8-minute continuation, which is the green market cipher B dot when you're above the 200 moving average. Which that is a pretty crazy strategy, guys. So I would look into that. Market ciphers, hands down. It's a no-brainer for the price it is. It's so cheap. It shows you so many different indicators all in one indicator to keep your chart nice and clean. All I have on this chart is a market cipher, a 200 moving average, and a volume profile. Oh, and I have this one here, daily, weekly, monthly levels. It just marks it in a gray line. I have it set to. I'll show you actually. So here's the indicator. And then this is just how I have it set. I don't like to see the tails of the candle, but you can also put those on, choose your color. Okay, we've now hit the golden pocket. We haven't hit the, let me make this bigger to hear. 30 seconds still far away. No. Just gotta wait. Okay, I'm gonna get rid of this line because that 1 minute right bull div, the one that we marked, that would have worked out. See how that demand created more demand because it wasn't taken. Okay, the 6 minute dot just confirmed. Now let's see if the 7 and 8 minute. And remember, if these dots are invalidated, that could be the start of where the local trend or downtrend could start turning into the macro downtrend. .30-second money flow has flipped back into the green. It's good for the bulls. So the 6, 7, 8 minute dots, once they confirm, their job is to take the high. Same with the 5 and 6 minute. If they fail to do its job and take this low out before taking this high out, that's not a good sign for the bulls. And all we're waiting for here is to see this 30-second starting to want to cross that. So right now we're hanging out right on the 1 minute 200 moving average. You got your 1 minute continuation, but the time frame before is saying you're not allowed to take it. So since the 1 minute is red and below the 200 moving average, we can look at the 2. The 2 minute is still above the 200 moving average, so there's nothing here for me. And I'll also give you another scenario with the RSIs. If you're waiting for them to flip at the top, the more time frames that you're waiting to flip, the higher the chance you need a looser stop loss. And the thing that you can see a lot of the times, let's say you're waiting for a bunch of time frames to flip, these unfortunately can pull all the way back to like the 0 line, and then the flip of it actually turning back green pretty well happens like right at the low, and like then you're already in a pullback, you're down at the 0 line. Like there's no way that you're gonna take the short there, right? Okay, so your 30-second just crossed. Your 1 minute is still in the green, saying more upside before more downside. Or consolidation, one of the two. And all it is time frames battling against each other, and then we pick when that best setup comes, when they're battling, when the clearest setup comes. That's how I trade. I'm very patient with my trades. Right here, if we can reclaim this POC, that's good. If we reject from the POC, that's bad. Very local. This is 30-second, very, very local. So your 6-minute confirmed and your 7-minute can print this dot whenever. Still has 3 minutes left. So remember, the market Cipher B dots haven't came in on the 7-minute and higher. It's only the 5 and 6 minutes still. So you can take this low and then get your 7, 8, 10, 12-minute green dots when we've taken the low again. It's just the more time frames that start to confirm, right? Qs are zeroed out. And the video is just hanging out. It's reclaimed a little bit. I think it was down almost 1%. Google has had a little bit of a buyback too. So kind of all the markets are recovering a little bit. Let's see gold and silver. Holy crap. Okay, so this is where you want to hold this POC for the bulls. POC tapping into demand imbalance. I would say if you lose this, your last chance is a swing failure here. If you lose that, then you fall back into this demand imbalance. So 1, 2, and then somewhere in here we would have to look if a bull div or something formed. And when we're in the zone, I just like to get rid of this so we can see it. And it can fully mitigate. These zones aren't buy zones. It's not like I'm randomly buying here. This is where if you started to mitigate or respect demand, this is where it would happen if that were to happen. We have lots, we just had lots of shorts close. We have a little bit of longs opening up. Yeah, we had lots of shorts close in there. Open interest, kind of this whole move down, has been fueled just by positions closing. So from this high to the current low, most of this was forced by just closing of positions. Now, since there was a 1-minute bull div, whenever there's a bull div, I always watch for higher lows, but I don't rush it at all. If it doesn't make sense, I just wait. I'll wait for that change of market structure. Because this is such a low time frame and we front ran levels, I would rather come down again. Personally, I would rather come down again, take the low, forming another like triple tap bull div. That's what I would prefer. So let's see, we're slowly losing the POC. Let's see where the little bit of volume is here. Okay, so we're now, demand is fully mitigated. So it can wick back in, it's not like it's over yet. But we're gonna put this into yellow now, because once demand is taken, that demand can flip into supply. So this either gets mitigated and you pump here, or this starts to create supply into this, right? It starts to create supply. So it's been mitigated, let's see. We have a little bit of liquidity here. And you just got to imagine all that liquidity, all that you should be looking for as liquidity is where would stop losses be? Where would you have put your stop loss? If you longed here, where would you have put your stop loss? Most likely below this low. And now you just got taken out, and that's how these swing failures work. Liquidity grabs, right? And what happened here? You see, we took this demand for 1 minute, we chilled into where the demand could flip into supply, and then we dumped down. Makes complete sense, right? So let's mark out some more supply now, right? Because the downtrend, once you're in a downtrend, you start to create supply. Okay, let's see if that, let's get rid of this, keep it clean. Okay, we're right at the golden pocket. Now, if I was looking for longs, how would I know whether or not to rush this in long or whether to wait? The lower the time frame that agrees, the higher the risk. The more time frames that agree, the lower the risk, but probably the crappier entry you got. So let's see. The 30-second is saying no. Money flow looks like crap and the RSIs don't agree. Let's see what the 15-second says. The 15-second is saying maybe on the RSI front, definitely no on the money flow front. The 10-second is saying yes on the RSIs and perhaps on the money flow, because you could kind of see a scenario where that happens. And the 5-second RSIs are saying, yeah, you could start watching for one. Money flow is kind of like just hanging out there. So let's see. And this is just no, like in a, the 30-second looks like this, the RSIs look like crap. This is a no for me. Okay, we hit right into this high volume node. This is the high volume node of this previous range. This is where it would be nice if, so I would prefer to take the low, but if we want to start to see this 6 and 7 minute dots start to come in, or what happened? I think the 6 minute already confirmed, right? Yeah, 6 minute confirmed. Come on. Sorry, it's taking a sec here. Come back to it. So the 5 and 6 minute confirmed. The 5 minutes job is to not take the low, to take the high before. If this low gets taken, that's the start of some higher low time frame starting to confirm, right? We're right at this high volume node. Do we have like a 15-second bull div? You have very, very local 15-second bull divs. You have 10-second bull divs. How do I know if this is something that I would take? I start to go through the low time frames. I really like my 30-second, and my 30-second is saying no way. So regardless of the bull divs, this is a no for me. We might have some background noise here for a few minutes. I gotta pop the window open. She's warm in here. You can see the RSIs like on these low little time frames, they're trying to like hold up. It's just the 30-second I don't like. The 1 minute actually doesn't look too bad, right? Well, and we have all the large time frame dots, so we're aware of what's going on. You have all the 5 and 6 and the 7 minute that are trying to confirm. You're at the high volume node. This is where it would make sense for a higher low to come. If a higher low is going to come, that's exactly the zone that I would say. I'm more interested down here, and I'm not ready to long this market. It's not time for me yet. I want to see the 3 and the 5 minute RSIs all flip into the green before I start trying longs. And we can tell who's going to start to win the battle, for example, is you're below the 200 moving on the 5 second, so we can listen to continuation shorts. The 5 second gave you a continuation short, but the time frames need to agree. So the 10 second gave you a continuation short. You're allowed to listen to this because the 5 second agrees. Does the 15 second agree? The 15 second hasn't happened yet. Now that's just on money flow in the dot. What is the RSI saying? So you see how if you're waiting for both to happen, so let's say with this dot the RSI was flipping into red, that is one I would take. These are ones that I stay out of because these are usually the losing ones. When your RSI is flipped, they're usually invalidated. Exactly what just happened there. Okay, 786. See how I had the high volume node on different time frames? Okay, look at that reclaim. You do have bull divs. Yeah, like this is where this is make or break right here. If this doesn't work, you're definitely going for the lows. This has to take us for the high right here. Why am I not rushing to take this? Because I've said I'm not interested in longing the market. I stick to what I say. I give myself the best chance. This is a bull div, but when this volume picks up, you can, this is where I like to just stick with what my plan was from the beginning of the day and stick with what I was saying. Because all these little things, since we've kind of jumped on, we were able to just kind of find all these little, so you're allowed to just pick and choose what you want to listen to. I think we had something up there and we looked at something there, I think. So let's see, the 6 minute was already confirmed. The 7 minute and 8 minute haven't printed yet. Okay, so your 30-second flipped. And this is what I was talking about. I just said a different scenario of it crossing, like when it's at the 0 line, vice versa. But this is, it's crossing green, but it's already way at the top, so I'm not allowed to take this. If it was crossing green at the bottom, I would be allowed to take it. It's crossing green at the top, I'm not allowed to take it. Same where if it's green this whole time, right? If it's green the whole way down and doesn't cross till red when you're looking for a short, you don't take the short when it's already back to the 0 line, and you don't take the long when it's already well above, right? So let's see, we're entering our first area of resistance, value area low, supply imbalance. Let's see if we can reclaim this high volume node of this sideways range. And now this box flips to yellow, because what happens with supply gets flipped into demand. Whoops. Yeah, I don't like anything about that one right now. This is very local range demand. Okay, so you're getting a 30-second continuation. The 1 minute you're not getting a continuation just because you're not above the 0 line. The momentum never had a chance to get above, so. You're back at the higher low golden pocket. If this is a higher low, this is the zone that it would come in my opinion. It would come right here. If not, I don't really see the scenario of just swing failing this. I would say it's either this or this, but I've been wrong before, so also watch here, but I would say either right where we are or right here. Now we don't have to play the guessing game, we can zoom in. The 15-second is saying, yes, once I give a 15-second green dot, if the RSIs are still green, yes, we can start to pump. The 10-second is saying the same, RSIs are red though, and 5-second RSIs are red, so this one needs a little bit. So I would say the only scenario here, as of this second, would be this 15-second. Is this something that I would take? No. And the reason why I wouldn't take it is because my 10-second is still red RSI, and my 5-second, you see how it's wide the opposite way? So when you start to see this, this is actually where you start to watch for a lower high. But this is only the 5-second, so we gotta understand this. So if I took a long in this scenario, this is one where my stop loss immediately gets put back to entry, like once I'm in a profit. So this is where the dot, remember that's the 15-second dot, so if I took it from there, I would have stop loss to entry. Just because the 5-second is saying watch for that lower high, right? And just a reminder, the 5 and 6 minute printed, right? So this low cannot be taken if we want that 5, 6, 7 minute continuation to start working. If you're a bear right now, you really want to see that 5 seconds stay red and start to give these dots. So you want to start to see these confirming if you're a bear. You have, actually it's more on the 10-second. You want to see this dot take this low if you're a bear. If this dot fails to do its job, that probably means more of the RSIs are going to flip. So this low needs to be taken for the bears, because then that dot did its job, right? This 5-second dot, if a higher low is coming, it would be this 5-second dot that's about to print. So if a higher low is coming, it would be here. Like of this, I just mean a very local higher low. Oh, it disappeared, so that didn't confirm, so we can take that away. You see how the 5-second dot didn't confirm? Okay, and it didn't even confirm before taking that. So this is where it can mitigate demand. Is it going to mitigate it and swing fail, or is it actually going to fully lose this and turn demand into supply? So I'm actually going to move this now. Okay, so it could just be mitigating. If this is a big swing failure here, how can we tell? We watch for signs if it is. RSIs are good on these low time frames, good. I would be watching right here for this 30-second bull div. Let's see if this 30-second can print. If this 30-second can print, it needs to take us for this high. And then let's make a scenario if the actual low gets taken. I don't really have one to be honest. Okay, we've taken the liquidity. We need to reclaim this red box for this swing fail to work. So it's still that 30-second bull div. So we'll put a line through it when it happens, or if it happens. This needs to be flipped. This is where the swing failure starts to trap traders, and then it dumps down. So the 30-second confirms in 26 seconds. Oh, it disappeared again. I think this is pretty important though, how you see kind of what's happening. Even if you reclaim this, I just find it cool that you can find where it's gonna have problems, right? We were able to give this box and it's having problems so far getting above it. Even if it gets above it and shoot, it still gave us an idea for 4 minutes that this was the zone that we have to get above, right? And this is where you don't have to always rush it. If things aren't making sense, you just stay back, because even if this is a support resistance sort of flip and you do this, a 3-to-1 trade, you're still well above a 3 to, you're at a 3.3 just running for the liquidity at the high, and that's with a loose stop loss. So if the, okay, so it just printed right here. So that's the 30-second make or break for the 30-second bull div. So let's say this works. I'm not willing to take this one just because I don't like how money flow and everything's looking, but I would be willing to take something like this that looks nice. So if I can find something like this, this is why I prefer to be patient, because then this is how my trade looks. So me being patient would be the same as this guy down here taking 2 or 3 trades, right? Just for me being a little bit more patient. So again, we found where that little spike happened. It was that 30-second bull div. Let's see if you can start to get the 1 minute dot start to confirm. Let's see. It confirms in 15 seconds. So this has to be it for the swing failure. If these things don't hold up, we're taking the lows for sure. This needs to go for the high. Remember, we had our 5 and 6 minute continuation dots here. This is make or break, hands down make or break. Look at how this daily candle could close. This is what I was kind of saying, guys. There's still lots of time on the daily candle, but we got to pay attention. If this closes something even below here, that's quite the wick that you would have at the top, where it would also make sense for a lower high to come in. So just really, this is an important day. Okay, we've now mitigated supply. This is key on supply. Now this turns to a yellow box. Or we'll leave it in a red box until we get a little bit above. See how right here, this demand has flipped right into this. This is key right here. This is now a green box. Where am I in demand? This is the key box right here. So if this is a 1 minute bull div and you're going to get a higher low, I'm saying it's happening right here. It could spring from here, or it's going to... And just another reminder, I'm only marking out imbalances, but the supply starts here. Watch. This is the key zone right here. It needs to spring from here. If not, And you see with even like these 30-second, what we were waiting for, right? We were waiting for this dot to confirm. Even with something like this, if you're starting to see those potential like bearish continuations starting to confirm, depending what exchange you're on, like you can put stop loss to entry and pretty well be break even on this, because these are aggressive D setups. If this was a A or a B setup, I definitely don't remove my stop loss. I just let my idea play out. But on C and Ds, especially on Ds, I don't take my time with my stop loss. And then first target is trying to flip this. If we can actually flip above this, this would be the target. Okay, let's see. This 1 minute bull div could be nothing. It could just be invalidated, continuation down. Now if we take this low again on the 30-second, you'll see it has a chance to form a triple tap bear div or bull div. So we could come in, take this liquidity into a triple tap bull div. It's mitigating the demand, make or break right here. You can see that supply is already being created above. If the guys were patient on the, let's see, more supply being created right here. So the trade, if you're being patient, in my opinion, no, I'm not taking it, would be this. That's not something for me to take though, guys. These are not trades I'm taking. These are the only scenarios before taking the low. So to me, this is the only long before taking this. So I'm just showing you guys. You're really battling this. Volume is really starting to pick up here, guys. This is make or break for sure. And again, I didn't take this long. I'm not taking the long. I'm not interested in it. So you see the supply is fighting. I'll get rid of this. This will just turn red, so it's a clear box for us. So this is the battle zone. Bulls need to get above this. Bears want to stay below this. If the bulls get above this first red box, the bears really want them to stay below this. This is so make or break because you have 1 minute bull div. This is where a higher low needs to come in. If a higher low doesn't come in here, you're definitely taking this. And this, like the one thing with these trade setups is, like, let's say you're looking for D setups today and you're willing to take Ds. As long as you have your strategy and it's in an area that makes sense to lose a trade, if you do, it makes perfect sense if you're looking for Ds and stuff, because your TP1 would be here and your TP2 is all the way to the high, right? Your TP2 is up here at a 11, pretty well a 12 ratio. So, and it all depends how much you want to pull. Maybe you want to pull all of it. If you haven't made any money this week, maybe you want to pull it all at a 3.4. On D setups, this is where I'm really quick with my stop losses. Would I have already moved my stop loss to entry? I don't know, right? I didn't take it, so I didn't have the heart beating. So it's hard to say would I, if I'd be moving stop loss to entry already. Honestly, probably, just because this needs to rip up to TP1. And we'll, yeah, I would put stop loss to entry most likely. TP1 is here, guys. TP2 is the highs. So this is where you would reject right here. Supply has been mitigated. Can supply turn into support? Look at that. Supply turned exactly into support. Now this has turned into demand. Very key that we're going up to that high. Okay, we're right back in it. Look at that wick. And if this TP gets hit, we'll just put a little line through it so we can see. We'll get rid of these ones. Because we'll move the TP2 up to the high. And again, I didn't take this. I wouldn't have taken it. It's just money, like it, yeah. Just, especially at the beginning of the week, this is just something I wouldn't take. I'd be more interested, so the play that I would take is once the 7-8 minute starts to confirm green dots, I would then watch for a higher low. I'd feel comfortable taking a higher low after that. I just didn't feel comfortable taking it. So TP1 got hit, and now I'd move this up to the highs. Maybe front run it a little bit, maybe something like that. And just to go back to kind of show you guys the style that I do, that was a 3.5 ratio in 5 minutes. 5.5 minutes. Meaning if you risked $100, you would have made $350. So that's just to show my style. This is why we can be patient all day, is because when we can be patient and wait for the setup, it can happen quite quickly. I didn't take this, it didn't set up perfectly for me. If this was on a Thursday and I'm profitable for the week, maybe I would have been interested. So we're at our first rejection zone. Let's pull a local fib from this high. Okay, we're at the golden pocket 786, and then we'll pull it from this high. So we're at first rejection zone, and then we can get rid of this line now. This one looks nice too. Swing failure, mitigating supply into the golden pocket. That looks nice. Let's see if this is actually going to top. 5 second, you have bare divs, but it's the 5 second. RSI is saying that we could easily go down on the 5 second. The 10-second RSIs are pretty well just equal. No like bear dibs or anything. Money flow is kind of whatever. 15-second RSI is flipped. 30-second is saying we're going to put a higher low in. Again, it's just the 30-second. The 1 minute is saying we're going to put a higher low, but it's giving us a continuation short signal. If the 2 minute is printing a red dot, okay, we can't print a red dot on the 2 minute because we're not above the momentum. And for this long, if you took it, the amount you pull, that TP is completely up to you. You see how when we reject, here, let me zoom in a bit. When we rejected off this supply, it created more supply. This is happening all day long. Regardless, sideways range, trends, and whatever, it's always happening. And stop loss to entry, of course, on the long if you were in it. And let's just hide it right now. Yeah, this is very key. This is a massive fair value gap. Two of them. This one would be much better to come all the way down here. If we start to lose the fair value, this is where you'd want to spring. Before actually taking the fair value, you would want to bounce here if you're a bull and a long right now. If you're a bear, you want to start filling in this fair value. Let's see if the 7 minute printed yet. So the 7 minute green dot confirms in 42 seconds. Again, the more green continuation dots that are invalidated, the more bearish things get. So if these dots start doing their jobs, then that's bullish because this is just continuation in an uptrend. If these dots start failing to do their job, this is where you get a crazy wick, because the wick would be formed, right? All of these dots are being invalidated and price just keeps going down, forming a massive daily wick. So what we do want to see for the daily to start looking better, for the daily candle close to start looking bullish, we need the 7, 8, 10, all these time frames to start confirming. And the job of these dots is once this dot confirms, it needs to target the high that created it. This is the high that created that dot. So if these dots confirm, we need to run back up here. If we don't, they're invalidated. Even if they pump to form a lower high, these dots would be invalidated. They didn't work. Even if it gave you a nice trade to a lower high, it still didn't work, regardless if it gave you the winning trade or not. So I would say it's all in the 7 minute. 7 minute just confirmed. Now we just watch the 8 minute. We know where. Let's just put a. This is really all we need right now. Okay, just give me a few minutes here, guys. Okay, we are right where the support resistance would flip. So previous resistance can turn into support. So you see how the 7 minute confirmed but immediately printed a red dot after? Like, you don't want to see things like that, right? The bulls don't want to see. Money flow is starting to roll over. To me, there's nothing more than the 7, 8, and 10 minute dots. That's the only thing that can save this trend. Get rid of these, clean this thing up. So we're right at the 382. Remember, this is fair value. You're allowed to tap into fair value a little bit, but the longer we stay under this, the more chance, right? So let's clean this fully up here. Let's do this. Let's just put one sideways range. Grab the POC of that one. And all this is distracting me right now. Let's hide this all. That's all we need. Keep the chart clean. I'll show the entry on the higher low if it gives one. If it's a very fast spring move, it's going to be from this dot here. So let's just mark it. If it's a very volatile, like lots of volume coming in and these are going to get eaten up, it's going to be that dot. So this can easily keep running down. I'm giving the scenarios of a higher low. So the 10-second, we haven't even had an opportunity for the dot yet. So we'll now give the 10-second dot. And then we'll see. The 10-second dot's about to print. And I'm showing you all this because if you think, right, that low is just a low, how do I get into this trade? Like, how do I know actually when to click enter? We're showing these because the RSIs, oh, it just flipped on the 10, but so you see how the RSIs on the 10 and 15 second are saying, yeah, it could make sense that a higher low comes in. And that's why we're watching it. The lower the time frame that you listen to, the higher the risk. So there's the 5-second or 10-second dot that came in. And then if this one, you go down, look at your 15-second, and then if everything starts to bleed over, you go for that low again. But I'm just showing these because if you thought the bottom, like that was the bottom, how do I get into these? The one thing with these is to go to the next level, you're looking at like a 5 ratio. And since these are all D setups, you can be really quick with your stop loss. I didn't take this, so I get rid of it, but you know what I mean? That's why I'm showing these. So this one you probably well, if you took the 5 second, I really never listened to the 5 second in that way, but you would have lost that one. Say you lost 1%. What is it if you pull right now? 2%. So if you close it right now, you lost 1% on the last one, and you just made 2% back minus fees. So you'd be up probably 0.8% for the day, if you just flash closed it there or whatever. So just examples. Now we watch to see, is continuation shorts going to start winning? So the 10 second just gave a continuation short, meaning the 15 second can listen to the 10 second because we're below the 200. So if the 15 second gave a dot, you see, this is make or break. Exactly how we had about an hour ago, I think, make or break. These versus that. If this is going to win, it needs to target back for the low. So boom versus boom. So this one, maybe you got stumped out at entry, maybe you still have your stop loss to the low, maybe you did just flash close at previous resistance. So many different scenarios. So we're going to see, is the 15 second going to start winning, or is the 15 second going to be invalidated? The second you take this high with full body candle closes, that 15 second continuation short was invalidated, and you're most likely going to run up to range supply. There is a style that I do, 1 second here, once in a while, if I'm very unsure of the market, but we have lots of good volume, I'll do what's called like hedge scalping, where my stop losses on both trades, neither trades get moved, but they're both at like 5 ratios. So just to give like the long scenario, say it was like this, you leave your stop loss and you target the next supply, something like that. And then if you took that short on this, you would have stop loss to the high and you would have been targeting this low. So you just got stomped out of there. Only, do not do this. Don't trade this way. I just want to show you guys another style of trading that I do. Okay, so the bulls beat the bears there. We tap back, just slightly tap back into that range demand. We're now creating demand, or supply is now flipping into demand, like we've been saying all stream. And now we see, okay, we're still below the 200 moving average on small time frames. So the 15 second is saying we're allowed to listen to the 30 second red dot continuation. That is still telling me we're a few minutes away from getting that, so I can come back to this time frame. Now we skip back over to our 7 minute. So once our 7 minute confirmed on this candle and the low was taken, so it was invalidated. So we want to see if the 8 and 10 minute can confirm. So for the bears, I'm watching the 30 second. For the bulls, I'm watching the 8 minute. So watch this 8 minute right now, and I will be right back. Okay, I see that the 8-minute confirms in 5 minutes. Let's see, the 10-minute confirms in 9 minutes, and the 12-minute is yet to print. So let's go low time frames. You see how we were watching the 30-second, but it's invalidated, right? Money flow is now green. The 1 minute is saying we're allowed to listen to the 2-minute continuation short, but the 2-minute is still above the 200 moving average, so we're not allowed to. So there's not a short opportunity for me. If you're just trying to listen to one time frame, that's like an F setup, and the only thing to dump this right now would be the 1 minute, but the 1 minute RSI is, yeah, so that's something that I would never take. And this is where we put our yellow box. Is this going to flip? So for the bears, the only short as of this second would have been the 1 minute dot. Not taking this, wouldn't take this. I'm going to put this to the side just so we can see somewhere about there. Target the lows. That's listening to only one time frame. That is below an F. That's a Z setup. This is where the support resistance would happen. If not, I would say you're going to drop back into the imbalances. If the imbalances don't hold, I would say we're going to start dropping to fill this big fair value gap that's below us. And then I don't really see anything that can stop us before this. We do have like a very little support resistance flip that could happen here. Okay, instead of a flip, it might just be a mitigation, right? Where these guys get stomped out, it just mitigates the supply and continues down. Or this is going to be where the flip starts. You're either going to bottom here or start to drop from here into this next zone. So either curl up and respect this supply-demand flip, right? Our 8 minute is 2 minutes away from confirming. And also for scalp trading, just to give a scenario, if you're ever, like, say you take the scalp trade, because this is scalp trading, so it's completely different. You can set up like stop losses at entry to pull 75% of your trade out, because you're saying like, it looked nicer before, I'm not sure about it, but I still want to leave a little bit in the trade, but it's not looking as nice as it did before. I do that all the time, trim 25%, 50%. Sometimes I go all the way to like 85% and just leave a tiny little bit. So if I was risking $100, I might push it all the way down to $15 if it wasn't looking good. So even if I lose it, if my risk all day was that $100 and I hit my 1-3-1, I'd be up $300. And then even just my one loser, if I trim it off when I think I'm going to lose, I might only lose $30, right? So one winner, one loser, but you're nowhere near even break even. You can still you can still lose 2 trades and still be profitable. So we're gonna slide it back here because that was the only setup. We said it was a terrible setup, which that's what it's looking like it was, but we'll see. We can come back to that. And as far as longs, there would be nothing here for me. We gave the scenario down here of what it would have been. I think that was down here. Yeah, because we had our TP here, I believe, right? Yeah, I think so. If we did take it, I just gave the setup. We didn't take it. I'm going to end the stream here right away. I just want to see if this 8 and 10 minute can confirm. Okay, so the 8 minute just confirmed. Your 7 minute has confirmed, but it's been invalidated. Because, again, like I said originally, it printed up here. The low got taken, so it was invalidated. Making the 8 minute dot even sketchier to listen to, and that's why I'm really kind of watching that 10 minute, because the 8 hasn't been invalidated yet. It just printed on these candles. So since the 8 minutes not invalidated, I can listen to the next time frame, which is like the 10 and 15 and the 12 minute. So this 10 minute confirms in 3 minutes. The 12 confirms in 3 minutes as well. Everything confirms in 3 minutes, the 10 to the 15. Gotta watch that little zone, right? Range supply. It's range supply because your downtrend, your protected highs here, break of structure, all this is range supply. I'll show you something here too, guys. Whenever you get like a continuation that you're watching, say like the 8 and 10 minute, you want to start to see all these low time frames, like lower than the 10 minute RSI, start to flip green. So red RSI still, and the RSI is this right here. Red RSI still, red, just flip green. And that's like when you know there's like make or break moments in the market. Is your strategy, if you have a good strategy, your strategy will tell you without even looking at the charts. We could just be using this and being able to look at the charts saying, okay, all the really low time frames are starting to flip bullish. The 5 and 6 minute still look like they're ways away, but we have a 10 minute continuation. So how would I read this? I would read this that this needs to be the bottom for the bulls. However, you still might, because the 5 and 6 minutes still need time for the RSI, might need some more time. Or you might go up here and it might need some more time before it pumps for the 5 and 6 minute RSI to flip. So this is key, because if this isn't the low, like there might be a scenario where you bull divot one more time, but I would say max only one more time it's allowed for before you actually start to fill all this fair value, right? Okay, so your 10 minute just confirmed, your 12 minute, oh, it didn't confirm, only your 10 minute, okay. So this is make or break for the day. I would say this or maybe one more tap at the low needs to be the low for the day for the bulls. If this isn't the low for the day, I would say this daily candle will not end up looking good. So pretty key. Maybe one more tap. If the one more tap doesn't hold it, I would say this daily candle isn't going to look good because you're going to fill all the fair value below it. So very make or break. Either this or this or this. Those are kind of my three scenarios. So there it is. Put that in a little file just to see how it plays out. And if you guys want to see the levels once more that I have on my chart, zoom in a little bit so you can just watch the next hour or so, a couple hours. And these are all just imbalances. You can clean this all up. You don't need all these imbalances like this. Definitely not. And usually I don't have them all like this, but there they are. Some POCs to watch. And then if we actually start to spring, just make sure you're watching the fib pull from this. So if this is the low for the day, just watch. This is very key, this POC golden pocket. Do we have this? Yeah, this is key, getting above this. If we don't get above this, I would say we're taking the low. If we get above this, I do like this because this is range supply right at the 786. This. So those are kind of what I would look at for rejections. For this to all look better, I would say this needs to be the bottom. I wouldn't really like a triple tap. A triple tap I think would be pretty risky. Alright guys, see you next time.